There's a tremor running through the global tech landscape right now, a pretty massive earthquake, actually. And some of the biggest, most stable names in software are starting to see their foundations crack. So, we're going to dig into what exactly is causing this massive shakeup.
It really all boils down to one central question that has every investor, every analyst, pretty much everyone spooked. After decades of just pure dominance, why are the world's biggest software stocks suddenly in a nosedive?
And look, this isn't about a few small startups having a bad quarter. We are talking about the titans of the industry. Companies like Salesforce and the Indian giants like TCS and Infosys, they have all seen their stock prices absolutely hammered. It signals this huge crisis of confidence that's spreading across the entire sector.
To really understand what's happening here, you have to zoom out a bit. We need to look at this fundamental change in what the market itself actually values. Because this isn't just a minor correction, it's a truly historic shift. Just look at this contrast. It's wild. Back in 1985, IBM was the biggest, baddest company on the planet, and it was powered by a massive army of 400,000 people. Okay, now fast forward to today. NVIDIA holds that same title, but with less than a tenth of the employees. NVIDIA's value isn't in factories or huge workforce. It's in its intellectual property, its designs, its patents. It's all intangible. So what does that tell us? It shows a massive pivot in where the money is flowing. The market is now rewarding these lean, super high-value companies that own powerful IP, and it's leaving the old labor-heavy models in the dust. And this right here brings us to the very heart of the software industry's current panic.
The primary cause of all this panic? Well, it's one single, incredibly powerful force: artificial intelligence. It's a technology that's basically promising to just rewrite all the rules for everybody.
And the stakes? They couldn't be higher. We're talking about a global software market that brings in $1.2 trillion in revenue every single year. An entire industry is basically facing an existential threat. You know, for decades, the business model was so simple and it was unbelievably lucrative. A bank needs to run its payroll, right? So it buys software from a company like Infosys, and it pays a big, fat subscription fee every year. It's been an absolute money-making machine. But now, AI is threatening to just smash that entire model to pieces. The core fear is that these new AI tools can do the exact same job as expensive enterprise software for pennies on the dollar. So for example, a company called Anthropic built an AI that can draft and review legal contracts. All of a sudden, that specialized software that law firms used to pay a fortune for, it looks really vulnerable. And that is why investors are spooked.
And this isn't just a problem for the software developers, you know. This disruption is sending massive shockwaves across the entire financial world. So first, think about private equity. You've got these huge firms like KKR and Blackstone, and they have bet big on software. 9% of all the companies in their portfolios are in the software sector. That's a huge, concentrated bet on an industry that is now suddenly under fire. And the risk gets even bigger when you look at the debt. In the trillion-dollar private credit market, a staggering 17% of all loans have gone to software companies. So if these companies start to stumble, their lenders are in very, very serious trouble too.
But there's a second shockwave, and this one's kind of ironic. The very companies that are building this AI revolution, we're talking the tech giants, they're spending so much money that even their own investors are starting to get nervous. I mean, just look at this number. It's projected that in 2026 alone, just 5 companies, Google, Microsoft, Amazon, Meta, and Oracle, are going to spend a combined $725 billion on AI and data centers. To try and put that into perspective for you, $725 billion is more than the entire annual budget of the government of India. So investors are looking at this unbelievable cash burn, and they're asking a really simple question. Are we ever going to see a return on this investment? So, with all this panic in the market and this astronomical spending, you might think the software industry is truly finished. Game over. But, you know, the story is never quite that simple. There are 3 really strong arguments for why software will survive this. First, these systems are so deeply embedded in how companies run, you can't just rip them out. Second, they run on private proprietary company data that public AIs can't get to. And third, hey, these software companies aren't just sitting around. They're going to adapt. They'll integrate AI to make their own products even better. But here's the key. You have to understand that not all software is created equal. The real risk is to what you might call dumb software.
Tools for simple, easily replaceable tasks like basic coding. The strong software, the really complex systems that manage critical things like HR and payroll, that stuff is way more resilient and a lot harder to replace.
But, and this is a big but, even if the software isn't completely replaced, its profitability is definitely under threat. Get this. The auditing firm KPMG paid its own auditor 16% less this year, and they explicitly told them it's because AI made their job easier and therefore less valuable. Companies are now going to use AI as a bargaining chip to drive down the prices they pay for software. So, okay, we have this massive disruption. Established companies are struggling, their investors are panicking, and even the tech giants are burning through mountains of cash. But in all of this chaos, someone is quietly winning big. The question is, who? Well, the real winners here are the companies that make the essential building blocks for the AI revolution itself, memory chips. We're talking about companies like SanDisk, Micron, and Lam Research.
I mean, this chart tells the entire story. While the software index tanked by 30%, memory chip maker Micron is up 90%, and SanDisk has literally doubled. The reason is simple. All those AI data centers that Google and Amazon are building, they require a colossal amount of memory. It's creating this huge supply shortage, and that is sending chip prices and their stock prices straight through the roof.
It's really a classic story of disruption, creating these new, unexpected opportunities. And it leaves us with one final big question. As AI continues to create chaos for entire industries, where is the next surprising winner going to come from?